So this happened to Apple after hours, and everyone thinks that SPY is going to tank tomorrow. I'm going to explain why not. Firstly, let's know that Apple has beat all expectations in their earnings. Fantastic earnings report that brought Apple right up to a high of about 170 for a while before the CFO and Tim Cook came out and spoke about some supply chain challenges as well as challenges they may face in China for the next quarter ahead, which tanked Apple to a low of 153 before we see some form of recovery after hours just before the market truly closed. Now, is this a cause for concern? And let me explain why not. Firstly, understand that there is an implied range. Now, implied range basically is just how options have priced in the fluctuation of the Apple stock, especially during earnings. And the implied range was about 5% of closing. So we closed at about 164, I think. 164. So 5% of 164 should be about 8 to 9 points. So technically we're allowed to close. Well, not allowed to, but we're priced in to close between 172 and maybe about 156. About 156. Now, we were fluctuating within range. This is an expected move up and down in an after hours scenario with extremely low volume. So it's not game over yet. Now, Apple is a strong stock, and under 150, a lot of people will find that, especially with this earnings report, that it may be underpriced. So there's still a possibility that Apple will still rally and rally the market along with it tomorrow when the market opens. Now, is there a possibility that maybe sell off? Yes, of course. Maybe up till 154, and that's where you see yesterday's low is, or to where the implied range is at 156. Now, I just want you to see in context, where have we been trading up to? Just a couple of days ago, we were at 154, and that's where the pre-market low is. So Apple is still very much supported at some level, even with this drop here. So are we safe with Apple? Apple is safe. You don't have to worry about Apple tanking the market too much. Amazon, on the other hand, if we take a look at Amazon, now this is another thing altogether, isn't it? This is too huge a drop. It's like what we saw in Facebook and Netflix. Now, this is too huge a drop to be within the range. However, Amazon's failings are mostly in their holdings of Rivian, and they've written off at least $7 billion of loss in Rivian. So if you're looking to short something tomorrow, Rivian will be it. Yep, but I will avoid such smaller cap stocks if I were you. The options will be overpriced, and obviously they will be very heavily manipulated because of their small market cap. But if I were to see Amazon, they are a fundamentally very strong company. AWS is still doing extremely well. It's just some of their supply chain probably meeting with some lower growth because of a post-lockdown period. But otherwise, most of their losses that you see here is from Rivian, and that's $7 billion worth. So is there a cause of concern for Amazon? Well, not exactly as well. So I don't have too much worry about this. Maybe it will bring the market down a little, but it won't crash the market. Now, overall, I think, although it was a spectacularly bad earnings report at the start, but once you read a little bit into it, their fundamentals are still very solid. It's mostly because of Rivian. And then we go on to Tesla. Now, there has been new discovery about what Elon Musk was up to, and it turned out that here and here he was busy selling Tesla stock to raise $4 billion for himself. I don't know about you, but a man who starts selling after superb earnings results, against his own supporters who are relentlessly buying and supporting his company. I mean, it's just business, right? Nothing personal. But for him to build a cult around him and then to do something like that is just not too right in my books. But that's Wall Street for you. If we found out the real reason that the market has been shorted that much, he probably also got wind of how the big banks are trying to also play the earnings and trying to keep the calls out of the money from here. So Elon has also declared that he has stopped selling from the 29th of April onwards. Now, what does this mean for Tesla? Now, hopefully, the Tesla faithful have not lost hope in Elon after this. And I'm telling you, I don't think they have. So this probably is it. We'll probably go, I don't think we'll go much lower. The lowest we can go, I think, is 800. We have a very strong support at 780, 800 level. But 850 should be it. I think later today, we will see recovery after knowing that Elon Musk has stopped selling and the true reason for all these red candles have been revealed. So I expect Tesla to see some form of recovery. So this is not too bad news for SPY. We're trading it today. So for today's pre-market earnings, right, we have ExxonMobil, we have a Chevron. I'm expecting them to obviously beat earnings, but I was also mentioning yesterday that all these have already priced in. But we're not expecting bad results from these two oil giants right here. So what does this mean for SPY? Now, take a look at yesterday's daily chart. Right, really strong result here yesterday. And I was mentioning, right, especially if we are at a critical support, that buying calls, and I was bullish on buying calls. But do understand that our current structure now is one of a lower high, and I mentioned that we have to be very careful, especially around the 435 range here. Now, if we were able to bounce off a 422 orange, we will be able to trade within 435 here. Now, so if we were trading below 422 and 417, right, buying calls would have been a very easy decision to make. We will buy calls, especially when you're at the bottom of the range and you see a structure like this. It would be easy to buy calls, right? Because you have a very strong critical support here like this. So buying calls, you have a clear stop loss. Even if you're buying calls at 422, it went down 422 slightly. Now, if you still have 420, you have 417. Your hopes can still be kept alive. You would still be thinking of buying calls later on, even if you got stopped. But now we are trading here above 422 at 427. And we do see that we are closing in on our range here. Now, 435 is where I think the most we will go while we form this low high structure here. It will be a little bit difficult to think that we will hit to 450 now with the earnings report of Apple and Amazon out. We are not that hopeful to be bringing us back to 450. So maybe around 435 range. Maybe we come down to the 422 orange here. And we retest 422 again. This has been a really very strong support here. You do realize that it is a difficult area here to be taking calls or puts because now you are in the middle of nowhere. So it's days like this that gets a little bit more difficult to trade because in your macro structure, you have to understand the macro structure like this. It'll be difficult for you to bet either upsides or downsides because your extremely clear stop losses are too far away. Right? You're literally trading within the range. So when we have opportunities like yesterday, when it started to revisit lows, now even if the chart has a chance to head down below this critical support, because you have a clear stop here, the chances are calls are probably the best choice. So this is with understanding of a macro structure that you're able to take better trades. Right now, we are in a lower high structure, right? And I broke down the zones for you in yesterday's video, right? We're 435 here. Now we have the orange 422. We have our low of about 417, and then we have 450 here. Now watch yesterday's video again, but I'm gonna just refresh very quickly. Now anything that's under here, we will be talking about a possible 75 basis points that is being talked about in the next coming months. If not, then we will hit back here in this range, 435 to 450, where we talked about the 50 basis points. Now, anything less than that, 25 basis points, now we will hit back to 470 for sure. Is this possible? Unlikely, but if you have not seen yesterday's GDP release, we missed estimates tremendously. Right? We were at a negative 1% from an estimate of a positive 1.4%. So we missed expectations quite seriously. Having 2 quarters of negative GDP growth would mean a technical recession. Would Powell want that? That's the question. So anything's possible, right? To prevent a crash of the US economy, especially such high inflations. It's a tough balancing act, and I'm telling you, the Feds are just way behind this. They could have solved the issue maybe earlier in the year or in December last year, but nope, we rallied to all-time high then. Could have just done something then before the Ukraine war. So anyway, now back to this. So we know our game plan, so we understand the structure from here. So do understand that not every day is an equal trading opportunity, right? Yesterday and the day before, we had great locations to take calls, right? Right now, as we're trading around this area here, you see the struggle, right? Do you take puts? Maybe if it goes up to 435, yeah, I may be tempted to take puts. But what if the structure has broken through and we are not actually in a lower high? But a lower high is a good structure to fall back on because we started flagging here. So I may take puts at about 435 level here if we do go up there, because we see that yesterday we had very strong resistances at about a 430 level, which was also a major resistance. And I'll show you that later in the day trading chart. But you understand what I mean now by not every day it's an equal trading day. However, I mentioned in the Discord server yesterday and that at this point in time when the market closed yesterday, I had profitable puts and calls at the same time. Now, how is this possible? Remember, one of my strategies, and that's what I always tell members to do, and I'm always desperate to do it, is to always catch the top or almost at the top and buy puts here. I still have puts open from there. And because of my understanding that this is a lower high structure, lower high, I'm trying to keep my puts alive as long as possible. And when I could, I would buy calls as much as possible. Now I bought some calls here, right? But I closed it when it hit 450 because I understood that, with Powell coming in, now we may have some trouble with Powell coming to speak. So we caught the bottom here back then, right, at about 435, if I'm not wrong. We called it last Monday. And when it went up to 450, we closed all the calls. So I had open calls here. And then when it tanked, right, I bought some calls at orange 422. And just past 2 days, I bought some calls again at 417. And that's what I've been telling members to do, right? Buy calls here, buy calls here. I have been always talking about buying calls, right? Especially at this level, because we were at this critical support. So I have calls here now as well. So if you have puts right at the top, you have calls right at the bottom. Now, does it concern you if you're trading right in the middle here? I was telling members that if you have puts and calls like this, protecting your upsides and downsides, when you day trade in between, I'm less worried. I take smaller positions, obviously, so that I don't jeopardize the risks of my calls and puts. So maybe I take 2 contracts instead of the usual 4 or 3 contracts when I day trade. And the stress is just reduced from being wrong. Because if I gain from the day trades, it's a bonus. If I lose from the day trade, it does not jeopardize too much. I have calls and puts which are profitable on both ends covering me. So as a day trader, now this is the next strategy you must be looking out for, right? We take one step back and understand that there could be overarching strategy that will be protecting your day trades. Now, this is just like artillery support, air support, right? Or if you're playing chess, well, your rooks and your bishops are just protecting your files while you are doing things in between, right? So this is important. This is an important strategy that we must have. So when it comes to times like this, where we have to try to catch the bottom, pay a little bit more attention, be a little bit more stressed when taking calls and puts here, it's going to demand a little bit more from you. It's not that simple. Sometimes you get stopped out early. That's fine. You don't lose faith. You have ideas of the structure here. And right now, if you have an understanding of the structure, and I've always been explaining, right, what is the macro structure? You have to understand that critical support here. I explain why this is a critical support, because back then, Apple was at critical support. What else? Amazon was at critical support. Microsoft was at critical support. The Qs were at critical support. Everyone was at critical support right here. We understood the price ranges, right? 417. We understood there was an orange 422 to 425. And then we understood that there was a 435. And we understood that there was a 450. We understood that there was a high of maybe 470 right here. Now, if you could understand what each range represents, right, it will be easy to trade knowing about the market context. Whatever Powell says, yes, we know it's going to crash the market, but to what extent, right? And if Powell says something else that will lift the market, it will rally, but to what extent? And all these are actually priced in the way of the structure that we see here. Now, this structure may change, right? Maybe we start to see some rally here, and then we start to see a head and shoulders pattern. Now, that could be the case, but this part of the story has not been revealed to us yet. And when it does, you're ready, because you know how the chart moves, you know the behaviors. And basically what we are doing is trying to piece up a story together. And when you're trading, always remember, not all trading days are equal. Some trading days are just easier than others, right? This was a good example. This was an easy trading day, I'm telling you. And I've always been saying to take calls, right? Even if you're wrong, even if I'm wrong, that's fine, because it was a clear-cut choice, right? This was an easy day to trade as well that day. I don't remember why, but we took many puts at that time, but this was a really easy trading day, right? Back then when we were at all-time highs, right here, this was also a really easy trading day. Told members to just take puts here because we are at all-time high in an extremely inflated market with the Feds coming in. So there are days where it's easier than others, and as a retail trader, you have to recognize that. Sometimes if it's a difficult day like today, it's going to be a difficult day. It's going to be a middle of nowhere. Now, you got to be taking risk off your trades. Now, this means that you have to be taking less risks, right? So if taking less risk means not trading or taking smaller trading positions, then you have to do that to protect your long-term P&L. Tomorrow is the last trading day of the week. So if you are green and you're seeing a day like this, right, in the middle of nowhere, of course, we have puts play, right? I will be playing puts when we near 430 or 435. But before that, maybe we retrace 422, buy calls then. So it could be a range-bound trading. More likely puts, because we're nearing to puts, calls at 422. I'll talk about the day trade later. But the idea is, if you are here caught in the middle of nowhere, you are green today, up till today. The whole week you've been green. Are you going to take risks? Of course not. Right? Reduce your position size for today. Don't take the usual 4 contracts. If you're taking 4, take 2. Or don't trade altogether because it's a Friday. Don't ruin your week. So make sure that we trade safely in days like this. Now let's go to the day trading chart. Try to explain some things. Now you take a look at SPY. Now orange is a very strong level here. Now, if I'm not wrong, pre-market yesterday, we closed, we bounced off orange. So orange is still a really very strong support here. Orange 422 here, right? So make sure that you take orange 422 seriously as a support. So we met with some resistance here, the yellows, so yellow 429 here. My target, hopefully for today, if we are bullish, is at 435 here. Now, if we do retrace back to this yellow 423 and this orange 421, I'll be loading up calls right here. Now, of course, you have to see the price action, right? And I'll explain yesterday's trade later. I'll be trying to take calls here, right? And especially at these levels here, and especially this too, I'll be trying to take puts here. Now, you see the range is so small, right? We close in the middle of nowhere. So it's just not too easy to trade later today, but it's still possible, right? So this is what we are planning to do. So let's end the week strong. I think it has been a great week. A lot of our members have made really good results. Trade safely, and I'll see you closer to opening bell.